Welcome to Market Recap Live. I am your host, Joseph Martin, and thank God it's Tuesday. And tonight, y'all getting a dress shirt. I got to do laundry. And yesterday, I wasn't feeling well, but tonight, I'm feeling great. But we are not about to do no hour and a half tonight. So we gonna do our best to stick to 1 hour tonight. So let's get to it. Tonight, we are taking a look at ticker PYPL. You might know them better as PayPal. PayPal Holdings Incorporated was founded in 1998 by Peter Thiel, Max Levchin, and Luke Nosek, with the first office opening in I got through the names and now I'm gonna mess up the city. Palo Alto, California. Now they are publicly traded on the NASDAQ and have a market value over $40 billion. PayPal Holdings Incorporated is in the financial services industry in the financial sector, and they are listed in the S&P 500 index. Some of PayPal Holdings Incorporated competitors are SoFi, ticker SOFI, Visa, ticker V, and MasterCard, ticker MA. We're going to review PayPal Holdings Incorporated's earnings, their website, and visit the charts to perform a quick technical analysis. But before we do that, let's do our roll call and check our stream poll. We are streaming live on YouTube and Facebook. Let's get this chat going and tell us where you're tuning in from. Put a YT in the chat if you're tuning in from YouTube, and put an FB in the chat if you're tuning in from Facebook. While you guys are filling up the stream and the chat, here's the mission statement. We are building a community over here for people who want to take control of their financial situation by learning how to unlock the wealth building power of the stock market. And we are streaming Monday through Friday following trading sessions at 11 p.m. Eastern Time. The U.S. stock market regular trading hours are 9:30 a.m. to 4 p.m. Eastern Time. And there's a link for the New York Stock Exchange calendar down in the description. Okay, so let's get to it. Let's get to these earnings highlights. Oh, I love this when this works. Okay, here we go. PayPal Holdings Incorporated, ticker symbol PYPL, the $41.8 billion company, reported its first quarter earnings today. They have a 52-week high of $79.50, which took place on July 28th, and a 52-week low of $38.46 that occurred on February 12th, which is a trading range of $41.04. I got a message I'm gonna get to in 1 second. And they closed today at $46.49. PayPal Holdings Incorporated earnings report beat on the top line, reporting revenue of $8.4 billion, which was higher than the market expectations of $8.1 billion, and beat on the bottom line as an 11% increase in total payment volume offset higher non-transaction expenses. EPS was higher than the analyst and market expectations of $1.27 when they reported an adjusted EPS of $1.34. PayPal Holdings Incorporated reported a GAAP net income of $1.1 billion, which was lower than the $1.3 billion net income they reported this same quarter last year. This represents a decrease of 13.5%. So for the first fiscal quarter of 2025, their net profit was approximately 15.6% higher than it is compared to now a year later. The earnings were released before the market opened, followed by an 8 a.m. Eastern Time conference call. As far as guidance, management reaffirmed their 2026 outlook and declared a 14-cent per share quarterly cash dividend. That 52-week low compared to today's closing of $46.49 represents an increase of 20.9% over a span of approximately 3 months. So if someone invested in February at that 52-week low of $38.46, they would be seeing a gain of $208.79. All right, let's go to the main screen. Let me pull this chat up. My sister is in the house. Here we go. Hey, sis. Appreciate you tuning in from YouTube. Hit that like and share. And I know you already subscribed, but thank you so much, sis. Let me put this back on the screen, put the like up, and let's pick up. Let's talk about why we visit these company websites. We're looking at the visuals and text to find answers to these key questions. What goods and or services does the company sell? How important are those goods and services to their customers? What makes this company stand out from the competition? And how well do they take care of their employees? To find those answers, we browse 4 key areas. The homepage for the goods and or services. About us for purpose, vision, and mission statements. Careers for employee benefits and opportunities, investor relations for SEC filings and stock quotes. And for your convenience, all companies featured in tonight's live stream are down in the description. Now let's go back to PayPal Holdings Incorporated's website so we can look at those things we just discussed. Bear with me, gotta pull it up, clicking these buttons, click, click, click. Here we go. That's not it. Hold on. There we go. There they are. So we got their website pulled up. Blow it up. Let's make sure we zoom in. We got me on the screen. Yes, we do. We got the right the disclaimer up. Okay. So PayPal. Now we are on the home page. I'm going to browse over a couple of things. Grow your business. Apply for funds, for fast funds with PayPal Working Capital. Okay, do more with PayPal. So they have mobile apps, of course. And PayPal used to be a big thing for companies using as a PayPal method. As a payment method. It was really, really, really popular once upon a time. And we're going to look at the charts and talk about that. Let me take me off the screen so I can show you what I found. So down at the bottom, we're going to visit the About section. We're going to visit jobs, and we're going to visit investor relations. So it's right down here at the bottom. So let's go to About. Put me back on the screen. Here we go. Shaping the future of commerce for millions globally. Okay, so they talk about who we are, how we work, our impact. Here we go with the cookies. All right. So did they zoom us out? This looks small to me. Yeah, they did. Let's zoom back in. Here we go. So who we are, a global community dedicated to putting more money back in our customers' pockets faster and with innovative solutions. How we work, our values of inclusion, innovation, collaboration, and our impact. Look here at the top. So right here, mission and values, that's where we need to go. So let's click there. Mission and values, there we go. Look around, man. So mission and values, we are revolutionizing commerce globally with this mission as our North Star. We are aligned around one central vision to make sending and receiving money, selling and shopping simple, personalized, and secure. So they talk about the values, inclusion, innovation. Remember, links for this website and all the websites we're featuring tonight are down in the description for your convenience. Tonight, we're going to move a little bit faster because I was on here a long time last night. So let's see where jobs are. I don't see them. I see investors, but I don't see jobs. So let's go back to the home page and go back down to the bottom. There we go, jobs. So let's see if they zoom me out. Hey, bro, I'm here. Got my ice cream. Okay. All right. She said she ready. You see, I can't read tonight. I ain't sick, but now I can't read. But thank you for tuning in. Let's get this going. Let me pull PayPal back up on the screen. All right. So opening possibilities for all. We believe now is the time to revolutionize commerce globally. Okay, join talent community. What I'm looking for the benefits, guys. So we're going to scroll around and see what's on this page, and then we're going to go to the top. It's probably going to be hidden in some type of drop down. Holistic benefits. Everyone who works at PayPal is provided with generous health, well-being, and financial plans so they can feel secure about their future. So they do have learn more right there. So let's scroll down. There's a video if you want to watch it. Links for the website are in the description. So let's just click here and see what we can find. Let's see if they're going to be very transparent or they're going to be vague. They're not going to give us too many details about it. Helping you thrive. Here we go. The cookies. Reject cookies. Helping you thrive. Welcome to PayPal benefits. Okay, what do? I click this employee. Oh, you got to log in. See, they don't want you to know nothing. You got to log in. They won't even let you read it on the website. Here goes something up here to say benefits. Let's see if this works. Benefits. Learn more about the benefits of working here at PayPal. So they talk about careers. Here's that just say careers / benefits. It doesn't look like something I can click. Well-being is a priority, your financial well-being, your physical well-being. Yeah, guys, they're real vague about it. That's what I'm seeing. They're not really telling you anything. You got to actually get the job before they tell you anything. By that time, it's too late. Let's go back. All right, let's go to investors relations. There we go. So I went back to the home page to find it, but here's investors relations. Let's zoom in. All right, here's the exchange information. So they trade on the NASDAQ. There's the ticker symbol. Here was the closing price today. They lost $3.90, which we'll talk about when we look at the charts. But here's what they have on the website. Learn more. Let's scroll over this homepage to see what they have posted. Okay, now let's go to the top. And I saw a few drop downs over here. I did not mean to click that. Please don't move. All right, stock information. So here's stock quote, stock chart, and some other investment tools. Let's click stock quote. So here we are. There's the information they have available on the website. There's the chart. And here are some other tools. All right, so we got that done. That's where everything is on their website. Let's move on. Let's go back here. Make sure we got the right thing on the screen. There we go. All right. So let's talk about this real quick. Let's cover this. Before we look at the charts, remember, professionals trade from a computer, not a mobile device. Mobile trading apps are limited. Traders lose critical detail and advanced platform features on a mobile screen. So keep in mind, trading from a phone is usually the least effective way for managing assets. To see every detail, use a full trading platform and watch these streams on a computer or a TV. Only use a phone as a last resort. Now let's look at the charts for PYPL PayPal. Let's go. Think or swim. I got them pulled up. We are over there. Here we go. All right, guys, we are looking at a 1 year daily chart. Here's that information right here. We already have PayPal pulled up, PYPL, and their 52-week highs right here with that $79.50. Here's their 52-week low of that $38.46. Now, this is where it gets deep, okay? We're going to go back in time and look at the historical data so you can see what I was talking about how popular PayPal used to be. So we're going to look at the 10-year weekly chart. PayPal used to trade for $310.16. In the last 10 years, the highest that price has ever been was $310.16. And if I take me off the screen, which I'm about to do now, we can see over here to the far left, the lowest PayPal has been in the last 10 years was $34. So now that you have this in mind, let's look at where PayPal is trading now compared to what it was trading for at $34 in 2016. Okay, so let me put me back on the screen and let's go over to the 1 year daily chart. So it was only $4.50 more than what it was trading for in 2016 when it was trading here. So that's February 2nd. I'm sorry, February 13th. I saw the 2 and said second. February 13th, this day right here where it had, no, it's not. Oh my gosh, February 12th was the 52-week low. Let me zoom in because this hairline is so small. You can see what I'm saying. So right there, February 12th. So we're going to use that tool. Let me show you what I'm talking about. So we're going to zoom in. This tool right here, the trend line tool. I'm going to connect that low to the highest point recently since that low. So since this 52-week low this year, since this 52-week low, there was an opportunity for a 35.99%, almost a 36% return in 68 days when it hit that 52-week low. That's huge. If on average they tell you you're supposed to get 7 to 15% investing in the SPY or some type of diversified, yes, the index, the SPY, we'll say the ETF. So they try to measure your performance or your gains against that as a metric. And that gains somewhere between 7 and 15%. So if you can do better than that, then you're doing good. That's what they measure your performance against. And they base that off of a whole year. This happened in 68 days. So thinking about what it used to trade for and what it was valued at then compared to what it's at now, just using those figures, this would seem like it's a bargain. That's what that would seem like. Now, they just had earnings, and that's what we're covering today, which we talked about earlier. And right here, based on the technicals, it gapped down. So this was yesterday, May 4th, and then you got May 5th. So the gap down that I'm talking about is yesterday's low. So yesterday's low, let me pull up the data box, the floating data box. It didn't do it. Here we go, floating data box. Yesterday's low was $50.22, and today's high was $46.72. So there was no trading activity between that low and this high. So I'm gonna put that line here. So there's no candles there. So it was no trading activity there during the normal trading hours. So if we're looking for support, I'm going to say the support is going to be a zone. And I'm going to show you what I'm using to draw this zone. The top of this candle over here, this wick, and the bottom of these candles, I'm blocking it. The bottom of these candles is going to be my body. The top of this zone. I'm going to point to the candles after I get this zone going. All right. I'm using the bottom wicks of these two candles. You can see that this candle wick dipped down in that zone. So this is going to be my support resistant zone. But right now it's support because this candle is above that zone. So this is going to be a support zone unless this price gets below it. As far as resistance, I'm going to say here's a resistance zone right here. And this is going to be kind of tight. Okay. I'm going to admit it. It's going to be kind of tight. But it looks like these candles kind of rode that area for a while. If you can see that. These candles right here, 1, 2, 3, 4, they dance, they tiptoe right on the top of that zone. But then over here, these candles struggled to get into that zone. This candle, this wick did get inside, but these candles had a hard time getting there. That's why I'm seeing it as a zone. And then these few candles, this struggled to get inside of it. Then these kind of fought to get through it. And then it tiptoed on top of it. So that's what I'm using as my zone. So that's our quick technical analysis. As far as right now, PayPal is trading below the 9-day simple moving average, which is this dashed green line, and below the 200-day simple moving average, which is the white dash line. So let's talk about this stock quote. And of course, this didn't work. I don't know what's going on with that. So we're just going to manually do it. So let's talk about the stock quote for PayPal right now. Let's get this out the way. PayPal opened the day at $45.37. They had a high of $46.72. They had a low of $44.51, and they closed today at $46.49, which was a trading range of $2.21. The trading volume. Now, remember, when we have earnings, volume usually increases, especially on earnings. Whenever the next trading session is following earnings or the day of earnings, volume shoots up. So we're going to compare that to what the average volume is for this stock. Okay. So they had 39 million shares of this stock traded today. So I'm going to take me off the screen, and we're also going to remove this floating data box. Hopefully it works this time. It did. So the average trading volume for PayPal, guys, is 15 million shares in a trading session. So it definitely is above average. It's more than 2 times the average. Not more than. It's 2 times the average. Yeah, more than the 2-time average. 2 times the average. So 40 million shares were traded today. I'm rounding up. Yesterday, so on Monday, they did about 13. So that was below average yesterday. And it went crazy today compared to where average was. So let's talk about the volume rank percentile. Let me put me back on the screen. So the volume rank percentile was 96.4%. So what this means, out of the most recent 252 trading days, only 9 days had higher volume than today. So 96%, 96.4% of the 252 trading days that just passed had lower volume than today. That's what that means. So we got our volume, we did our quick technical analysis. So we are done with PayPal. So let's move on. Let's go to the main screen. Thank you guys for tuning in. Hit that like button, leave a comment. I'll give you a shout out. Appreciate you. Okay. Consider subscribing. Now let's go on and talk about this. Back to the community. I would appreciate it very much if you guys share the stream, hit the like button, subscribe. And if you wish to send a monetary gift to support the content, Cash App and PayPal links are down in the description, as well as the ticker on the screen. Whoo, okay, let's look at what the S&P 500 index did today by using the SPY ETF. This ETF gives investors an opportunity to participate in the broader U.S. market by allowing them to own a percentage of each company in the S&P 500 index. Okay, so let's go back to the charts and check that out. So we can take PayPal off the screen, and we're going to change this to the SPY. Now, over here in this symbol box on the Thinkorswim platform, let me put this disclaimer up so we can talk about the platform. Okay, and we go over here, we type in SPY, ticker symbol SPY for the Spider S&P 500 ETF. Now, guys, they hit a new 52-week high today. So we're looking at a 1-year daily chart, and we're looking at ticker SPY, which is the ETF we just discussed. I'm about to zoom in. So when I zoom in, we can see that the previous 52-week high was on May 1st. The date is down at the bottom. To make it easier on you, I'll cut on the floating data box because the box has the date at the top. The date is right there at the top of that top box. So May 1st, 2026, this year, that high of $724.87 was the previous 52-week high. They broke that high today. So now the 52-week high is $725.04. So I'm going to change this area of resistance, which was the previous 52-week high. I'm going to turn that into a zone. And I'm going to explain to you why I'm going to do this. So we're going to zoom in so you can see what I'm looking at. Where it closed at today and this previous wick, they're kind of like the same. So what I'm going to do, I'm going to create a zone moving this line up to this 52-week high, okay? So what we can do, we can just remove this line. So we're going to remove that drawing and we're going to put a new one. And it's going to snap to the top. Bam. $725.04. We got that. Now, this is what I meant by a zone. This rectangle tool. So we're going to place this here. And if we need to adjust it, we'll adjust it. So I want to make this the close. So the close was 723.77. 723.77, 723.79, 723.77, and then 725.04. So now this would be perfect. That's my resistance zone, guys. That's what I'm seeing as my quick technical analysis on the SPY. I'm gonna zoom in so you can get a good look at it. Spread it out a little bit, pull it down. So this is my quick technical analysis on the SPY. I'm looking at this zone right here as resistance. The price needs to get above this for this to become support. So it is trading above the 9-day simple moving average and this previous area of support. So it's trading in between this support and this area is acting as resistance. So we need to see it do another high. And I mean, this is crazy because if we go back, remember how we looked at PayPal when we went to the 10-year weekly chart? I'm gonna take you to the 10-year weekly chart for the SPY. There are no historic highs higher than this. This is why these are record highs for this ETF. It's never been this high. And it just keep churning up, churning up, churning. It just keep turning up. I went from churning to turning. It's just turning up. So let's go to the 1 year daily and let's do the quote for this ETF because we did our quick technical analysis. And then we'll talk about the volume and then we can move on. So the SPY traded today. They opened today at $721.77. They had a high of $725.04, which was the 52-week record high that they hit today. They had a low of $721.49, and they closed today at $723.77, which was a trading range of $3.55. So when we look at the trading volume, they traded 36 million. We're going to round that up to 37 because it's 36.9. So 37 million shares of this ETF today. So we need to look at what the average trading volume is, which we talked about earlier. So let me take off the screen. The average trading volume for the SPY ETF is 75 million shares is what they normally trade. So what they traded today was definitely below average, and they're trading lower. This is less. The volume decreased from what it was trading on Monday. So this is Monday's volume and this is today's volume. Both of those are below average, but today is even lower than it was yesterday. So the volume is decreasing as the price is increasing. And it's been doing this for a while. Like every time it spikes up, it's going up on lower volume. Okay. And the SPY is trading above the 9-day simple moving average, the dashed green line, and above the 200-day simple moving average, the dashed white line. All right. So let's go back to the main chart. The main screen. Education Pro, got it. Okay, now let's look at today's winners and losers. First, we're going to look at the loser so we can end the night on a high note. And we can look at the winners last. Keep the best for last. All right. So let's go over to the charts. There's the button for that. We can take SPY off because we're done with the SPY. And now we're going to go right over here to the Market Watch tab. And here is our watch list. And I already have the losers pulled up out of the S&P 500 watch list. Here's the drop down for the watch list right here. So the biggest loser for today is ticker HII. Let me pull that up on the screen. Bam. So Huntington Engles Industries Incorporated is the biggest loser for today. They lost 10.25%. Their previous close was $363.37, and they closed today at $326.13. So let's pull out our calculator to show the hypothetical. Give an example. If someone had invested, let's say $100, use a smaller number tonight, $100 and bought it at their previous close, and they lost that 10.25%, we would just multiply this times 10.25 and then hit the percentage. It changes it to a decimal and hit enter. They would have lost $10.25. We negate it, add the $100 back to it, and it'll actually subtract it. So they would be left with $89.75 from their $100 investment if they was to lose 10%. So you could just play around with those numbers to see what it would be if you wanted to do that on your own time. So let's go over to analyze so we can get some more information about this company. So Huntington Engles Industries is in the industrials sector. I'm looking at it right here. So we're going to talk about the company profile. Let me take me off the screen. So here's their website right here. And the website is also in the description. The link is in the description for your convenience. Okay. So let's talk about what they do with this description by reading a little bit of this description. Huntington Engles Industries Incorporated designs, builds, overhauls, and repairs military ships in the United States. It operates through 3 segments: Engles, Newport News, and Mission Technologies. I'm not going to read no more than that. I'm ready to pull their website up. So here is their website. Let me blow this up. Boom. Let me zoom in. Man, the zoom is crazy right now. Okay, there's the one. So we're zoomed in. So America's Sea Power Company. Put me on the screen. I want to be on the screen. And then we change this disclaimer. There we go. All right. So we're on their website. Let's get it. America's Sea Power Company. Capabilities built and integrated to deliver advantage across domains. That looked like a submarine. All right. So what I'm doing, I'm scrolling down, but this is one of those websites where it does the zoom in, zoom out, move down, and all around. Now that's a ship, but I know that other one was a submarine because most of that is under the water. Mission driven, mission ready. We deliver the world's most powerful ships and all domain solutions in service of the nation. Ooh, there goes some weapons. I say unmanned systems, intelligent, autonomous platforms to extend operational reach. Core fleet. So I bet you they got, oh man, they got a bunch of stuff in here. Yeah, this is military stuff right here, guys. Oh yeah. Oh yeah. And what's been going on with in the political space with the wars, they might be seeing some business right now. They might be seeing some business. Okay. So we scrolling through here. Discover HII as an investor. So they got over 40,000 employees, over 12 billion in fiscal year 25 revenue, and they employ veterans. Gotcha. Okay, so here's where we're going to look to browse through this company. We just went over the homepage. So they have the company overview. We're going to visit there. We're going to visit our history. And we're going to visit careers and investors. I don't know if I want to do it because I want to move faster tonight. So let's go ahead to go to company overview. Let's get started. Company overview. So we just talked about this. They just showed this. So all they did was like kind of repeat it. They didn't talk about the 140 unblocking it. Oh man, come on now. Come on. Right here. I was blocking it. Go up to the top so you can see it. Remember, the links for the website are down in the description for your convenience. So over 140 years of history, over 5,000 suppliers, and we already talked about over 40,000 employees. So they talk about who we are, so we can definitely get that information right here. HII is America's largest shipbuilder and a global all-domain defense provider. So we know that they're America's largest shipbuilder. So we have to pay attention to the words that these companies are using so we won't get psyched out by the things that they're saying. So not in the world, but in America. But they do deliver the world's most powerful ships and technologies that safeguard our seas, sky, land, space, and cyber. So that's what we do, our people. So they talk about the number of employees across the country, 3 divisions, 1 mission. So they have shipbuilding, Newport News, shipbuilding, and mission technologies. They talk about their mission, their values. I love how well they have this laid out compared to the other companies that we look at. You shouldn't have to go on a scavenger hunt to find this stuff. It should be right there on the page. So I love how organized they have this. So let's see what they say about their history. Okay, that's a lot of photographs. Okay. Our history. The legend continues. Not going to read all of this. History timeline. So if you really wanted to go through this and dig in, they got it laid out for you. You can do that on your own time. We ain't about to be all night. So, okay, let's move on and go to careers. Let's see what we can find out about the benefits. We already know that they hire a lot of veterans. So I'm assuming they should have some good benefits if that's the case. So HII careers, your career, our defense, build it. Build your career. They keep mentioning this. This is different. 110 million invested annually in workforce development. So they reinvest in their employees to help them advance their skills and level up and keep developing and growing within the company. So that's dope. So machine learning experts, engineers, technologists, scientists, logistics experts, and business administration professionals. That's a mouthful. But yeah, I don't see the benefits. I see the different divisions and different departments that they have going on. But here it is, high benefits. So it looks like it's kind of vague here as well. They talk about 401k savings plan option. Yeah, it look kind of vague, guys. You got to visit. I'm not going to that website. We'll be all night. I'll mess around and get lost. But remember, the links are down in the description for your convenience. I'm ready to go to the investors page. We're moving smooth tonight. So here we go. We on the investors relations page. I'm about to zoom in. So here we go. We had 150%. Thank you guys for sticking with me. I really appreciate you. So they trade on the New York Stock Exchange, NYSE, ticker HII. There's the stock price, and here's what they lost today. Remember, they were the biggest loser. So they talk about the corporate overview. I'm scrolling over this page just to see what's on it. Okay, now let's go back to the top. So I saw it right here, stock info. So we have the stock quote, dividend history. So it looks like this company pays dividends. So let's click on stock quote. Here's the stock quote information, and they have a chart available on their website. And here are some other investment tools. So here's dividend history, but I'm gonna show you where we can find this on the Thinkorswim platform as well. So let's go over there. Let's go check that out. Thinkorswim, bam. Switch the disclaimer, bam. We already got the ticker pulled up, absolutely. So let's go over to the charts. Moving smoother now. So we're looking at the 1 year daily chart for ticker HII Huntington Engles Industries. And now we know exactly what they do. They deal with defense, they build ships, submarines, military equipment, and things like that. So let's zoom. We see the 52-week high. Let's just cover that. Take me off the screen. So the 52-week high for this company is $460. Their 52-week low is $215.05. So it looks like in less than a year, let's get this so you can see it for yourself. This is why I say it's very educational to look at these charts. You'll find out these opportunities are out here. So think about it. People tripping about the war. The war needs this stuff, especially with the Strait of Hormuz. I can't think of the name of. It's called the Strait. They're dealing with stuff on the water right now, with the war, with the Iran stuff going on. They're dealing with that passageway. That's why our gas is high. But they're battling over there on water. This company deals with defense and weapons and water. Look at their stock. I don't think it's a coincidence that it's going up during the time of preparing, because they knew it was coming, for this war on water. So the stock was down here at $215.05, and in less than a year, that stock went up over 100%. You can see it with your own eyeballs right there, 113.91% in 264 days, in less than a year. So if something goes up 100%, whatever that person invested, they double their money. So if that person invested $1,000, they made $1,000. So the $1,000 grew to $2,000. And here was an opportunity in less than a year. Now let's go back and look at a 10-year weekly chart to see if it's ever been this high. Nope, didn't take long to see that. So let me take me off the screen. So we can see on the weekly chart that this happened to be resistance this week right here. Let me zoom in because this is acting funny. So if I zoom in, this candle right here at the top of this wick, we're going to draw that as resistance. Now I'm going to zoom out and we're going to see that right here. So this was the beginning of 2020 and the end of 2019. This price level the price came right back to that area and found that as resistance. It was not able to get through it, and it sold off and came back down here. So the 10-year low is right here. That would be $136.44. So now let's zoom out. Now we connected it to the high over here based off this current year. Now what if we connected the low of that all the way to this? What percentage change is that? That's 237% over a course of 1,988 days. I need my calculator. I don't know about you, but I'm about to pull my calculator out because I don't know that off the top of my head. So we're going to clear this out and we're going to put in 1988. So that's the amount of days. Divide those by 365 and then we'll get the years. So a little less than 5.5 years. It was over a double opportunity in there. So if someone had invested $1,000, the $1,000 would have grew to $3,000 because the ROI would have been $2,000 for an example. And you can see that it went up multiple times. It even was low down here. So what was that? It was trading. So in the beginning of 2025, if we zoom in this area right here, we can see that it was trading for $158.88. So now if we use that tool again and connect this low to the high again, we could get another estimate. Well, it's not an estimate. It's actually doing the math. So a little over a year, 392 days, it was 180%, 89% opportunity there. And you don't have to people don't have to catch the whole move. That just shows you that the opportunity was there. So if it was 190% opportunity, there was 100% opportunity, 80%, 30%, 40%, 50%. You see what I'm saying? But day traders tend to do this crazy thing, getting everybody under the impression that you're just going to get rich overnight, which is, in my opinion, foolish, because day traders fail 97% of the time. They don't talk about that. And I think it's because they selling people dreams and courses instead of educating them on the risk involved with not putting time on your side. So even staying in the market with an opportunity that you did your homework on, 3 months could produce better returns than you just trying to take out of the market in a day. It's just a small, the opportunity for the move is too small from what I would see. When you're looking at the size of the candles and the price move, you need time in the market. And this wasn't even connected properly, but anyway, let's move on. So I spent a lot of time on that because I got excited. I like what I saw about the company, and we're very educated on knowing what it is they actually do. So it looks like they had earnings today. So let's look at that. Yeah, they had earnings today. So their earnings were released before the market opened and the price gapped down. So we can see that the price on Monday was the low of this candle. Okay. So the low of Monday was $357.69, and today's high was $342.06. So here's our gap. So the price gapped down today. So there was no regular hour trading in between these two price levels. Okay, so it went down on earnings. Now remember, we talked about this before. Just because a stock price goes down on earnings doesn't mean the earnings were bad. Institutions or people who invested during that time could just be using the earnings volume, because we talked about volume, to take their investment capital or their profits out to put it somewhere else in the market. They might see a better opportunity, especially since this has started trending down, to wait for earnings to use that volume to close their positions. So that could be what was happening. Could be. And then I think yesterday I had talked about, yes, I did. It's not even a matter of thinking about it. I talked about consolidation. So let me take this. Let me change. And I know I said we weren't going to spend this much time on it, guys, but just stick with me. This is very educational. So if I zoom in right here, I want you to see something. You notice how tight these candles are? Like, they're not really moving in a wide range. I'm going to recognize this as consolidation. You can look it up. Now, just to give you a quick definition of it without you looking it up. Consolidation is when the price is in a real tight zone. It's not really moving too high. It's not really moving too low. So it's like trending sideways for a minute before it either goes up or it goes down. Since it gapped down, this consolidation to me was distribution. They were selling this stock to people that didn't know no better, retail traders, and they also call them dumb money, before they dumped the price down on earnings. That's why the price was so tight on this price level. We can see, since we drew that line, look how much the price action stayed right above that line. It stayed right above. So how many days is that? This wasn't completely in it that day, but I'm just going to count that one too. 1, 2, 3, 4, 5, 6, 7, 8, 9. So about a week, about 2 weeks, because these are business days. So about 2 weeks. It was trending sideways before the price gapped down. So I recognize this from what I'm seeing as distribution during that consolidation phase. So the price is trading below the 9-day simple moving average, and it closed below, which was right here, the 200-day simple moving average. So we didn't do a quick technical analysis, but I'm going to say right here is going to be my support zone, my support level. And I'm basing it off these candles that came back down to this area, and it got tested here, and then it jumped up. So this price, if it was to continue down, I would expect it to catch support here at 297.81. If that support doesn't hold, then it's going to come down to 276.69. As far as resistance is going to be at that 357.69. So that's the level above. So you know where I'm seeing resistance, and this is where I'm seeing support. So now let's go ahead and do our stock quote for this. So let me zoom in a little bit, mouse over it. So Huntington Engles opened today at $338.13. They had a high of $342.06. They had a low. It wasn't even going off. I got you, sis. I'm gonna pull those comments up in a second. Had a low of $311.53, and they closed today at $326.13. I think I missed something, so I'm gonna just repeat this from the top. They opened today at $338.13. They had a high of $342.06. They had a low of $311.53, and they closed today at $326.13, which was a trading range of $30.53. Now, when we look at the trading volume was 1.7 million. And remember, this was earnings, so we should be seeing an increase in volume. So this immediately tells me that the average trading volume for this is probably going to be less than a million or really close to it. So let's take me off the screen and go check our labels. So when we remove this floating data box as well, we go over here. So the average trading volume, oh my gosh, is less than half a million. It's less than half a million. So they traded 1.7 million shares of this stock today. The previous was just below average on Monday. Okay, so when we look at the volume rank percentile, you put me back on the screen. The volume rank percentile was 99.2%. So only 2 days out of the most recent 252 trading days had more volume than today. So today's volume was higher than 99.2% of all the other days coming up to today. Now, let's pull up these comments. And I had no idea where I was when sis left these comments, but we're going to put her on the screen and get these shout outs. So she said, yeah, it does. I have no idea where I was when she put it. So let me explain to you what's going on with this, guys. I'm looking over here, and this system does not have a chime. I wish it had a chime to let me know when somebody puts a comment up. She also says so true. So I don't even know where I was when she said that. When Facebook leaves a comment, when somebody leaves a comment from Facebook, I don't get a notification. Like, it doesn't let me know, like, beep. When my sister messaged earlier, she was messaging from YouTube, my sister Marissa. So when she did that, I got the notification sound, so I was able to see it. When my sister Tiara, when she does it from Facebook, I don't know how to set this thing up for it to chime for Facebook. I haven't figured it out yet, but that's why the message was delayed. But thanks, sis, for the comments. So let's move on. Let's go to the winner. We can move on to the winner now. Let me put this back on the screen before I forget. Put the light back on the screen. Let's go to monitor. We can go back to the charts. Okay, so we're done with this ticker. So let's take this off the screen. Man, we spent some time on the technical analysis on this. What time we? Oh, we doing good, because we're going to do this one fast. Let's go to Market Watch. Hit percentage change. Here we go. So the winner for today is ticker WAT. These two companies, guys, I'm so glad. It's like a breath of fresh air to have two new companies we haven't seen before. We've been seeing SanDisk like crazy, Axon, Albemarle. It was a few companies that just kept popping up as a winner or a loser, like AppLovin. So I haven't seen these before as a winner or a loser, so I'm glad that it's something different. So ticker WAT, Waters Corporation, and they went up 13.54% today. So I'm really interested to find out more about this company tonight, because I'm learning a lot as well as we're going through this stuff together. So this 13.54% gain came from the close. So they closed yesterday at $301.88. They closed today at $342.75. Now, we did do earnings on PayPal because we cover earnings, but we also found out that the biggest loser had earnings today as well. So it seems like this is kind of like showing a pattern. When it's increased volume, it either pushes these companies up to the top or it pushes them down to the bottom. But we just gonna keep doing what we do and doing our due diligence and learning and just keeping our eyes and ears open, all right? So let's pull up the calculator and do an example of what that percentage return will look like. Let's use $500. So if someone invested $500 and they got that 13.54% return, we're gonna do this a little different this time. So we're gonna multiply it times 13.54%, and we're gonna negate it before we use the math problem, before we click enter. So now it's already negative. Oh, this is not them. They didn't lose this time, so there's no reason to negate it. So this is going to be $67.70 profit. This is a gain because they didn't lose. So then if you add the $500 investment to it, now the $500 investment, which was the principal, plus the ROI, which was $67.70, together grew to $567.70. I hope you got that. All right, so let's move on to the Analyze tab. So here's the ticker, WAT. They're in the healthcare, okay? They're in the healthcare sector. Very interesting, all right? Because it seems like healthcare has been beat down for a minute, and they're the biggest winner today. So we might need to keep our eyes open on what's going on in the healthcare sector, all right? So let me take me off the screen. So Waters Corporation, that's the company's official name. Here's their website, and the link for their website is also down in the description. So let's read this description. That's on the Thinkorswim platform. I hope that wasn't confusing to you. So Waters Corporation provides analytical workflow solutions in Asia, the Americas, and Europe. The company operates through two segments, Waters and TA. I have no idea what TA is. Oh my gosh. Well, let's pull up their website. We already have them on the screen. Let's blow them up. Let's zoom in. I hope they explain what TA is. Cause I don't want to slow this down any further than we already did tonight, because I want to kind of wrap up on time. But I would just go to AI and put that. Matter of fact, oh man, it's bothering me. I got to do it, guys. Bear with me. I got to do it. I got to find out what that is. So what I'm going to do, I'm just going to tell you what I'm doing. Let me put me on the screen. I don't even think you can see me. Can you see me? No, you can't see me. I'm just talking away. Matter of fact, let me put me on this. I was bound to mess up. You're just bound to mess up. I just knew something. Don't look at that right now. Go ahead and do what you're doing. You're doing too much. But it's bothering me. I don't know what TA is. Segment, Waters, and TA. So what I'm going to do, I'm going to highlight what I see over here on the Thinkorswim platform so I can copy that first sentence of the description. So I want to teach you this so you can see what I'm saying. And it's not letting me copy it. Of course they're not. So let me bring this over so you can see what I'm doing. I want you to see. So if I bring this over, pull this up, and then bring you over here so you can see what I'm doing. Blow this up. Go here. There you go. We can leave that ticker up there because we're looking for. So what I'm going to do, I'm going to go to Yahoo. I'm going to go to Yahoo. I'm going to go to finance. When I go to finance, I'm going to go to put the ticker in, WAT, Waters Corporation, right? So now blow this up. This look nasty. Blow this up. Boom. Zoom in. One. It's already zoomed in. That's too much. Out. All right. So right over here, we're going to go to profile. Go to profile, and then they should have their website over here. So that, now we should see description. Here's the description. So right here where it says this TA, I'm going to highlight this. Copy it. And now I'm going to put this in AI to try to figure out what is TA. I don't know what that is. So I need to know what that is. So I go over. You can't see it, but I'm searching it right now. I'll bring it over so you can see it. I just want to collapse the menu. I don't want you seeing everything I'll be looking up. I'll be looking up. It's saying I'm right. TA Instruments specializes in thermal analysis. So that's what it stands for. Thermal analysis, TA. Okay, so now we know. So I just taught you. If you don't know, look it up. That was the point of me taking the time to do this. If you don't know, look it up. Being ignorant or being dumb is a choice. You can go look this stuff up and find out anything you don't understand. Admit you don't know and look it up. And I showed you how to do it. So now we can move on to blow this back up and we can go to their website. Bam. All right. So this is their main page. We're going to scroll over it to just browse the home page real quick. Remember, the links for the websites that we covered tonight are down in the description for your convenience. So now we're down at the bottom. Let me take me off the screen and I can point to where we're going to look. We're going to read over this together. So I do see, so we're going to visit careers. We're going to the investors and about waters. No, we're not going to do that. I'm just browsing over the other thing I see. All right, so let's move on. We're going to do this fast. So let's go ahead and go to about waters. Put me back on the screen. Okay, did they zoom us out? I have no idea. Let's see. Zoom in. No, they didn't zoom in. So they talk about waters right here. Man, they got a lot of stuff on this website. It's just everywhere. It just seems like there's a whole bunch of stuff at once. Technology ensures safety. When technology works seamlessly, science knows no limits. All right. So I don't see purpose. I don't see vision, or I could be moving so fast and they just don't have a label on it or something. Great science thrives on collaboration, not isolation. Got to work together. Work together. Science builds trust, making an impact. Technology ensures purity. Our awards. So we can find out about the awards. Here's their founder. Oh, his last name is Waters. That's cool. Jim Waters. I wonder if he had his name changed. That's weird. It's my name. I got a funny story about that. I know I'm rambling now, but I bought a book on Forex and the author's name, his last name was Forex. I'm like, oh, he got to know what he talking about. Man, that was a dumb decision. I wish I never bought that book. So yeah, somebody having something in their name don't mean they know everything just because it's in their name. I learned that the hard way. So anyway, we looked at careers. We talked about, no, we didn't. We looked at careers. We went to about water. So let's go to careers and then we can go to investors and then we can look at the charts. So there's careers. We want to know what the benefits are. Keep in mind what we're looking for. Life at Waters. I'm on the screen. Yes. Ticker on the screen. Yes, yes, yes. All right. Total rewards, our story, innovation, student opportunities, learn more about Waters. So these are different locations. So they're in Milford, Massachusetts. I hope they're not, what's that, Delaware? Is that Delaware? Shanghai, China. Oh, man. And Ireland. Okay. International for real. All right. They talk about their impact. I don't see anything about benefits, guys. Let me go to the top and see if it was something I missed. Shop, contact, events, about Waters, education, support services, about Waters, shop, dot. No, I don't see anything like that. Contact Waters, blah, 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 blah. No, I don't see it. All right. So let's go down to the bottom and see if we can find investors relations on this page. Yep, investors. So let's go here and we're about to get ready to wrap it up. Thank you for joining me, whoever that is. Hit the like button, consider subscribing. I appreciate it. I appreciate you. I really do. So investors relations, I kind of like the stuff moving in the background. That's the stock price. They trade on the New York Stock Exchange. There's the ticker. They went up $40.87 today. My little watch telling me to go to bed. Mind your business. So, all right. Now we're going to look for the stock information. I'm just browsing over this page to see what I can find. All right. Nothing much. All right. So at the top, we're going to look at the drop downs to see if we can find the stock quote. There it is. Bam. Hit that stock quote. Here's the stock quote information. Here's a stock chart that they offer on the website. And here are some other investment tools. And I told you guys we was going to look at the dividends, and I didn't when we looked at that chart. So we're going to clean that up when we go to Thinkorswim. Matter of fact, let's do that now. So we're looking at water, but I said I was going to look up the dividends for the company that we covered before. So that ticker was HII. We're just going to put that back on the screen. We're just going to cover it real quick. Because when I say I'm going to do something, I want to make sure I do it. So here the dividend information down here at the bottom I said we're going to look at. So Huntington Engles Industries pays $1.38 for every share when they pay their dividend quarterly. They pay it every 3 months. So it looks like it increased. So let me take me off the screen so you can see it. It used to be $1.35. So it was $1.35 here, $1.35 there, $1.38, $1.38, $1.38. That's what I'm seeing on the chart. Now this one is an announcement ahead of time. So these are the 4 they paid in the last year. This is the announcement they made. So this is the upcoming dividend that hasn't gotten here yet. That's why you see 5 if it's quarterly. So that's why it's broken down like that. All right, so let's go to the winner. I covered the dividends for you because I said I was going to do it. My apologies, I missed it during the time. So ticker WAT. And immediately, now that we just talked about dividends, we can see that this company does not pay a dividend. We don't see it down at the bottom of the screen. So their 52-week high is $414.15. Their 52-week low is $275.05. So if we just look at this move, guys, from this low to this high, that opportunity was 50%, over 50% in 108 days. So less than 1/3 of a year. There's another example of an opportunity right there in the market. Now it went down too now. So if we look at the loss from here to this low, that was a 31% loss. Over 31%, but less than 32%, 31.73% loss to the downside. And this was the gain of 50%, 50.68%. If that looks weird to you, you're going to have to do some, you're going to have to brush up on your math. Because I know it's kind of weird because you would expect, well, if it went up 50%, it's about the same. So here's the thing. If a stock goes up, if a stock doubles, that means it went up 100%. But if it loses what it doubles, it only lost half of what it was. So it's a 50% loss. It's weird. Like percentages is different. You got to pay attention. It wouldn't be 100% loss. It would be a 50% loss because the whole thing counts. I hope I explained that right. Yeah, because it definitely wouldn't be 100% loss. Something just walked up. I heard a chime. I don't know where that came from. That's why I'm looking crazy, guys. But I guess I'll figure out what it was later or whatever. But okay, so let's get the technicals for this. So I'm gonna put that as support. It really should be like a zone. So let's just clean this up. So here's the support zone I'm seeing. And I know that's far away from what's going on because the price gapped up. So let me zoom in. We're looking at a 1-year daily chart. And we didn't go out and look at the year. But yesterday's high was $307.98. And today's low was $334.04. So here's the gap up. And then it gapped up above the 200-day simple moving average and the 9-day simple moving average. And this area we just put as support. Oh, no, we just put that there as the gap. So that was the gap that happened. Here's the support zone. So it came down there and tested it. 1, 2, then they had earnings. And they had earnings today too. So the biggest winner and the biggest loser both had earnings today. The other one gapped down and this one gapped up. That's what we seen. So everybody we covered today had earnings. And links for every website that we covered are down in the description for your convenience. So we're going to look at historic. So let's go back at a 10-year weekly chart and see what we see. Okay. It's a lot going on here, guys. I know it is. But I'm not going to draw zones here. I'm just going to draw lines. So I'm going to say those are what I'm seeing as resistance. So when we look at this, when we zoom in, these are kind of like in no man's land because it didn't even come up to that line. It didn't get up to 352. But you'll notice when you look at stocks that's like over $100, the support and resistance levels and zones, they end up becoming a little bit wider and less accurate because it's more like it's way more price action in space when you get into the hundreds versus in the double digits, like the tens. So prices between $10 and $99 behave differently than stocks once they get past 100. So when they're trading at 100, 200, 300, and $400, the gap up and gap downs are crazy. Because if you were gonna be accurate, you would change this, you would pull this down and say that this was gonna be resistance because of how many times it touched that area. And then if we take this off, you'll see what I'm saying. We remove that. It tested it there, it tested it there, it tested it there. It came down and tested it there. So when you're drawing support and resistance lines, you want to see the candles that you focus on come to that area and either fail or succeed. Come down, test it, bounce off of it, or come up and test it and bounce off it. So that's what I'm seeing as resistance because it hasn't been able to get through it 3 times recently. And then when it comes down, you see that support zone. It tested that zone on this candle, this candle, and then it was able to trend up. So that's our quick technical analysis. And now let's do our stock quote. And this is a weekly chart. So let's go back. This is the daily. So zoom back in. We're on the daily. We were looking at the 10-year weekly chart. We had zoomed in so we can really see how the price action behaved around these levels. And now this is the 9-day simple moving average, and this is the 200-day simple moving average. This dashed white line and the dashed green line. 9-day simple moving average, 200-day simple moving average. All right, let's get the floating data box up here, and we're about to get ready to wrap up, guys. Just bear with me. Here we go. So WAT, ticker WAT, opened today at $338.09. They had a high of $347.99. They had a low of $334.01, and they closed today at $342.75, which was a trading range of $13.98. When we look at the trading volume, they traded 2.1 million shares of this stock today. So let's see what they trade on average. And take me off the screen. When we look at the average, take the floating data box off. The average trading volume for this stock is 800,000. So they don't even trade more than 1 million shares in a day. And they did over 2 million today. And then they did over 1 million on Monday. So the volume definitely was increasing leading up to earnings and on earnings. Now we need to talk about the volume rank percentile. Put me back on the screen. The volume rank percentile is 97.2%. So out of the most recent 252 trading days, only 7 trading days had higher volume than today. So today's volume was higher than 97%, 97.2% of the other 252 trading days. All right, we done. We done. So let me go ahead and give you my closing. We made it, guys. You already know. I hope that you learned something, and I hope that you earned something. Thank you guys for joining me tonight. I've done 2 interviews with up-and-coming content creator Tiara Owens, sharing how I got started investing in the stock market, my profits and my losses. And the link to that playlist of interviews are down in the description. And make sure you tune in weekdays following a market trading session at 11 p.m. Eastern time. Take care and God bless.